We're back. Tuchman and I. That's all you need to know.
That's right. It's the first one of our 2019, first show of the year, Modern Wall Street. Peace.
Okay, so that means we got to make it a good one. Peter, what a funny market you just said.
It's a funny market. It's just the intraday movement action is interesting to see the sudden. We're seeing. Okay, let's talk of the big picture.
Wait, what are we seeing? Sudden what?
Sudden sell-offs. Right? We're opening strong. We're seeing bits of sell-off around the 10:30 level. Right? We've just seen it a couple of days now. I don't make it sound like it's more than it is, but then the market's coming right back. So that means there's a really big bid in the market. People are, we've always talked about it. People need a reason to buy a market that's gone through what it did in October, November, then the crazy evisceration between December 4th and the bottom, we hope, of Christmas Eve day. We've rallied back 11% from that low. We've retraced 50% from the December Christmas low, right? And, look, there were people, they were calling it bear market. They were calling it corrections. They were calling it all this stuff. And we've often said, I don't like to use those terms anymore. They're not particularly relevant in a day where you can go from a bear, solid, fundamental, great market to a correction bull market in 20 minutes. Then you also had a lot of tax selling, right? We saw tax selling happen in September, October, but those tax implications were positive ones. And then basically, so people sold their winners, and if they were lucky, then they sold their losers at the end of the month, right? There was a lot of that. There was a lot
in oil too. We saw it in oil too.
Correct. We saw a lot of that in oil. Good news is that the Saudis are cutting oil production in a big way, and they seem to be something we can put our teeth into. And we've seen oil rally back, probably one of the fastest, most furious rallies in oil in many years, from 44 back up to 51 and change.
And it is holding above 50 as we currently speak.
And that's a great move, and that's significant. Let's go back a minute. So why is the market up? We saw some kind of a deal on the table a little bit with the Chinese. We saw the Fed's transparency get to a sort of a nice, yummy spot, if I may use that term. Not a financial term, but where you're basically saying that we're going to be patient, we're going to be data-driven, and we actually may postpone yummy. I don't know.
Did you just say yummy? What did you say? The Fed is yummy.
Let's go back for a minute. It was a really great moment when we saw this. We got told a story that made sense, right? And then that same day, so then we had jobs numbers in December were great. That started it. We saw unemployment rate actually bip up a couple, right? So that's negative. That's not good for employment, but it's actually good for the posturing of the Fed.
Is it still under 4%?
It is 3.9. So it went from 3.6 to 3.9. But in turn, what that ended up doing was that kept the posturing of the Fed solid, that we may postpone things till June. So all those things, and then the tariff thing, and so I think we have three good reasons to buy the market. There is a bid in the market, and I think people are a little less skittish. Let's go with skittish.
Holding strong. Gotta flex.
Hold the yummy, go with the skittish. I love you.
I'll see you later, Peter.